Today, we're tackling the optimal order for investing your hard-earned cash in 2024. Remember, this is for educational purposes only, and consulting a financial advisor is crucial for personalized strategies. Now, picture yourself building a magnificent fortress of wealth. Before you start constructing elaborate towers and sprawling battlements, you need a sturdy foundation. The first 3 steps in our investment journey are all about solidifying that base. Step 1. Fortify your financial walls, creating an impregnable emergency fund. Imagine your emergency fund as the thick, impenetrable walls of your financial fortress. Unexpected events, like a car repair or medical emergency, can act like battering rams, trying to breach your defenses. Here's how to build those walls strong. Calculate your needs. Firstly, figure out how much you need to weather these storms. Aim for 3 to 6 months of living expenses. Think rent/mortgage, utilities, groceries, transportation, and minimum debt payments. Choose your weaponry. Where will you keep this emergency fund? Consider a high-yield savings account for easy access. Talk to your bank about options that offer good interest rates while maintaining liquidity. The power of automation. Set up an automatic transfer from your checking account to your emergency fund every payday. This set-it-and-forget-it approach ensures you build your reserves consistently. The just-in-case stash. Consider a secondary emergency fund for truly catastrophic events, like a major home repair or job loss. This could be a separate savings account you contribute to less frequently but with a larger target amount. Step 2. Conquer the debt dragon. Slay high-interest debt. Think of high-interest debt as a fire-breathing dragon lurking within your fortress, constantly draining your resources. Your next mission is to vanquish this beast. Prioritize the peril. Identify your high-interest debt, typically credit cards and personal loans. List them from highest to lowest interest rate. Here's where the debt snowball or debt avalanche strategies come in. The snowball focuses on paying off the smallest debts first for a quick morale boost, while the avalanche tackles the highest interest debts first to save the most money in the long run. A debt elimination arsenal. Explore options like the balance transfer method, where you move high-interest debt to a card with a 0% introductory APR. Consider debt consolidation loans, which can simplify payments and potentially lower your interest rate. Remember, explore all options and choose the strategy that best suits your financial situation. The power of negotiation. Don't be afraid to call your credit card companies and negotiate. Explain your situation and commitment to paying them back. Sometimes, they might be willing to lower your interest rate. Step 3. Secure your treasure trove. Maximize employer matching and tax-advantaged accounts. Now that your walls are strong and the dragon is slain, it's time to secure your treasure trove, your retirement savings. Imagine employer matching as a magical portal that doubles your deposited gold contributions. It's free money you simply can't afford to miss. 401k or IRA, these are your tax-advantaged retirement accounts. Contributions are often tax-deductible, and your money grows tax-free until you withdraw it in retirement, with some exceptions. Don't leave that free employer match on the table. Contribute enough to grab 100% of your employer's match. The power of compound interest. Time is your greatest ally when it comes to retirement savings. Start early and let compound interest work its magic. The earlier you start, the more your money has time to grow exponentially. Choosing your weapons. Within your 401k or IRA, you'll have different investment options. Consider target date funds, which automatically adjust your asset allocation as you near retirement. You can also explore individual stocks, bonds, or mutual funds with the guidance of a financial advisor. By fortifying your emergency fund, slaying the debt dragon, and securing your retirement treasure trove, you've laid the groundwork for a strong financial future. Stay tuned for the next steps in building your investment fortress. Step 4. Constructing your investment towers. Building a diversified portfolio for long-term goals. Imagine your long-term goals, like a dream vacation or a down payment on a house, as magnificent towers within your financial fortress. Step 4 is all about building a diversified portfolio, the foundation for these towers. Here's how to construct them strategically. Know your risk tolerance. Are you a fearless investor comfortable with the potential for higher returns and higher risk? Or are you more cautious, prioritizing stability over aggressive growth? Understanding your risk tolerance will guide your investment choices. The power of diversification. Don't put all your eggs in one basket. Spread your investments across different asset classes to manage risk. Think of asset classes as the building materials for your towers. Here are some key ones. Stocks represent ownership in companies and offer the potential for high growth but also higher risk. Bonds represent loans you make to governments or corporations, offering steady income but typically lower growth potential. Real estate can be invested in directly through property ownership or indirectly through real estate investment trusts, REITs, offering diversification and potential for rental income and value appreciation. Cash equivalents, low risk. Investments like money market accounts or short-term bonds, offering liquidity and stability for short-term goals. Choose your weapons wisely. There are various investment vehicles at your disposal. Brokerage accounts. These offer more control over your investments, allowing you to buy and sell individual stocks, bonds, or mutual funds. Mutual funds, professionally managed baskets of stocks, bonds, or other assets, offering diversification and a variety of investment styles to match your risk tolerance. Exchange-traded funds, ETFs similar to mutual funds but trade on stock exchanges throughout the day, offering lower fees and more flexibility. The core and satellite strategy. Consider a core portfolio of low-cost index funds that track broad market indexes like the S&P 500. These offer diversification and a hands-off approach. You can then add a satellite holdings with more specific investment strategies or asset classes based on your individual goals and risk tolerance. Research and rebalance. Research potential investments carefully before committing your hard-earned money. Regularly rebalance your portfolio to maintain your desired asset allocation percentages if they get out of whack due to market fluctuations. By constructing a well-diversified portfolio, you're laying the groundwork for your long-term goals to flourish within your financial fortress. Step 5. Protecting your fortress. Maintaining and monitoring your investments. Your financial fortress isn't a set-it-and-forget-it structure. Just like any castle, it requires constant vigilance and maintenance. Step 5 focuses on protecting and monitoring your investments. Develop a long-term vision. Investing is a marathon, not a sprint. Stay focused on your long-term goals and avoid emotional decisions based on short-term market fluctuations. Regular reviews. Schedule regular reviews with yourself or your financial advisor to assess your portfolio's performance and ensure it aligns with your goals and risk tolerance. Adjust your asset allocation or investment strategies as needed. Beware of fees. Investment fees can eat away at your returns. Research expense ratios of mutual funds or ETFs before investing. Consider low-cost index funds that offer broad market exposure with minimal fees. Beware of emotional investing. The market has ups and downs. Don't panic sell during downturns. Stick to your investment plan and avoid making impulsive decisions based on emotions. Stay informed, educate yourself about personal finance and investing. Read books, listen to podcasts, and follow reputable financial news sources. The more you know, the better equipped you'll be to make sound investment decisions. By following these steps, you'll be well on your way to building a strong and prosperous financial fortress. Remember, consistency and discipline are key. Stay tuned for future videos where we delve deeper into specific investment strategies and navigating the ever-changing world of finance. Remember, this is a general roadmap. Your investment journey will be unique. Consider your risk tolerance, time horizon, and financial goals when making investment decisions. Thanks for watching. Leave a thumbs up if you found this helpful, and let me know in the comments below what investment questions you have.